Welcome to week 31 of my Trading for a Living challenge, where the goal is to make over $1,000 every single week trading options. And if you're brand new, the playlist link is down below in the description or pinned comment. And make sure you subscribe and hit that bell notification so you don't miss out on any of my future videos. Now, let's get straight into week 31. I'll be honest, I was quite disappointed with the amount that I made. And I said at the back end of week 30 that I was going to do two grand. I could have done 2 grand, but the cost of rolling my in the money Tesla and Meta calls really what ate away at the profits that I made. And you can see here, I've allocated only 33% of my capital. I still got capital available, and I need to open some new positions in week 32 to at least get to the 2,500. So my aim here is to make about $1,500 in week 32 here, because I need to do something here to kind of get my runway up as high as I can. So officially in the record books, $390, 62% behind $639, and I'm now 13% behind. Another thing I've just added as one of my subscribers that commented on last week's video is I wanted to show a cumulative time tracker to show how much time I've spent on this to achieve $27,000. So you can see here that I've only spent 21 hours across 31 weeks to make $27, as opposed to 1,200 hours to make 31K in a 9-to-5 job. So again, just putting things in perspective about how trading can open up your time. Yes, I've made less money. The goal was to hit this. I'm not doing too badly. If we think about in the grand scheme of things, to be 4 grand behind, 31 weeks in, and spend less than a day achieving that outcome, I'll take that. I'll take that indeed. So now let's have a look at the trades. And I've just realized I forgot to add the screenshots in, but you guys know I do this every single week. So yeah, I will add those in so you guys can check that out in week 31. So let's start with Tesla. So Tesla in week 31 is, you guys know I've got it. Well, I own 300 shares, but I also have an inverted strangle on Tesla, which was at the 120, 170. So what I did is I bought those 2 options back. I rolled up my call from 120 to 125, and I actually rolled down my put because Tesla was trading around the 190-ish mark. It's now jumped back up to 207, so I could have made a bit more premium. So I rolled that down to 165. So what we have now, we have an inverted strangle now at the April expiration. So I've rolled out by, I think it was like 60 odd days, to roll up my call to 125 and roll down my put by $5 to 165. Now, looking at where Tesla currently is at the moment at 207, I will also probably look to roll up my put to 170, 175 to again neutralize the delta and bring in some more premium. And then lastly, I had a short call on, again, expiring March 17th, which I rolled again to the next monthly expiration cycle, and I picked up $447. So we have a look at the call. When doing that roll, this is what caused me not to get a decent amount of income in. It cost me $855 total to roll from 120 to 125. So if I just do 855 divided by 3, so it cost me $285 to roll up by $500, which is a good trade because you're picking up that intrinsic value. And I need to bring this call strike up because it's very deep in the money, but it cost me a lot of money. And then obviously the put cost me $440. So that whole roll, I had to pay $415 to place that inverted strangle onto the next expiration cycle. And I did make $447, which then gives me an overall net credit for Tesla of $32. And Tesla, you guys know that Tesla has been my main position for me to collect income. So again, being in this position, I need to open some kind of new positions to make some more money. So we have a look at the chart, so we can just look at the technicals on what exactly is going on. So you can see here, you got my inverted strangle at the 125, 165. And then we have that short call as well, all expiring April the 21st, and my 300 share assignment at 282.50. Again, we're seeing the RSI fall off, and we're kind of seeing Tesla now consolidating in this kind of area. I was hoping to see a bit more movement this way, which then allows me to be more cost effective to roll this up to 130, which will be in the next expiration cycle. Tesla do have their investor day, which I think is today. And again, their new production in Germany of around 4,000 cars a day, a week, whatever it is. Again, there's a lot of excitement around Tesla at the moment. And, we're going to see how it goes when it tries to break out of this channel. We still have the February, which will be the missed pivot. It's the last day in February today. So, it'll be interesting to see what happens over the next 30 days or so. So my action here is I might play around with this depending on what happens. Whereas if price starts to go back up, I'll need to sell more puts. If price goes down, I will sell more calls. That's basically what I need to do, because I've got capital available, and Tesla is a high volatile stock with the rich premium still, to allow me to generate that income with the rest of the capital that I have in my portfolio. So now we have a look at Meta. Very, very similar situation. Again, I had an inverted strangle at the 105 call and the 155 put. I then rolled up my call by $5 and then also kept the put value exactly the same. So to do this whole roll, I did generate 500. Look at the wrong thing here. That's probably why. I did make $386 for making that. I paid $386 to make that roll, which again, it's not that great. I don't want to be giving money away every time I do these trades, but I find myself in this position managing defending positions. I want to be on the attack like I was with this short call, which decayed in value and allowed me to roll the option there. So I took a $386 debit, but Meta is looking a bit more interesting, or going a bit more in my direction for this chart. So you guys know that I do own 200 shares, so I'm above my cost basis, which is great. But the problem is I've got this stupid 110 call, which was originally covered calls I was doing. But again, I rolled this up from 105 to 110. I've kept the short put where it is at 155. And, we are starting to trend down, trying to fill this kind of gap that was left upon earnings. So I don't really want to play around with this 155 put. My options here is if Meta continues to rise again, to push my put up, or to start selling some more puts around these levels here to generate more income and to neutralize down that delta for this deep in the money call. So that's the plan there. Again, if you guys have any questions, just comment down below, drop me an email, and more than happy to answer them in terms of what I'm doing. AMC. So AMC had a bit of a rise this week, but where we are at the moment, we still have got the strangle at the 2 strike and at the 23 strike. I did not roll these because I just want to close down these positions. This was the last position that I created prior to me moving the account to margin. So I think I'm fine here. I don't want to faff around with this. I just want this to expire. I also do have, which I did last week, the $14 call, again, March 17th. I'm not looking to keep these positions. I'm looking to get out of AMC, if I'm really honest with you. But I feel they've got earnings coming up shortly. So I think it's today, isn't it? Today, tomorrow. So we'll see how the stock reacts. I can't see the stock, going up by 100% between now and the end of March the 17th. So not much to do here. I'm just going to let that run out and I'll buy them back when there are a few pennies to close out of AMC. Then we've got 2 more. So we've got Coinbase. So Coinbase is easier to visually show you on the chart. Is that I had the 105 and the 120. I rolled those to the 100 and 110. So Coinbase has been going very much in my favor. It's been dropping down. We've got this missed pivot here. I expect it to get to this missed pivot level. And these, I think 3 contracts each, I think from memory have I got? Yeah, 3 contracts each. I expect these to depreciate in value. And again, these are working well for me. Coinbase still has high volatility in there, some good premiums. And again, that's why I'm able to go all the way out to 100, 110 here to kind of do that. And if these were to get challenged, I would then just sell calls against them to make it into a strangle to neutralize out the deltas. So that's why I've got capital on hand here. And if I was trading a portfolio, this would be in a lot better position than where I'm looking at as it stands. Lastly is Google. So Google, I had the 86 put again, March 17th. I rolled out to the April expiration cycle and dropped it down by $1 to go pick up. How much did I pick up in premium? $114. So not that much, but it was just something in there just to, again, generate something on there to offset on there. And again, my plan here is very simple, is if it goes up, start bringing up the puts and making those adjustments as we go there. If for whatever reason, and it looks like it's going that way to go down, I'll start selling calls above it to neutralize out the delta and manage the position there. So not really much there, fairly basic stuff for me to kind of manage one leg, whether it's a call or a put, convert it into a strangle if one of the sides gets tested out. But if I need to generate premium, the good thing is about when you sell a call on top of an existing put, or sell a put on an existing call, the buying power effect is very minimal. So I can add this leg onto the trade and it will only cost me, 1 to 2% additional in terms of buying power of what I'm already holding for the put option, which is why you can see that I don't need to add it, but I might add it just because I've got open positions. It's more capital efficient, and again, it brings premium through the door. So hopefully that kind of makes sense in terms of where we are. Again, not happy with this, but I need to do something here. Got 33%. I'm looking to jump that up to around 40 to 45% and try to be as efficient as I can. And again, in terms of my stock selection here, it's got to be high IV rank, high percentage volatility in terms of premium to allow me to go a lot further out in terms of strikes and delta to pick up as much premium. So Tesla and Coinbase are the two favorites of mine. They're very liquid, very easy to trade. And again, as you can see with Coinbase, we've gone all the way out to 100, 120 to be able to do it. Things like Google, the premium is not really there anymore. So again, it's a bit more of a, what's the point? You might as well put it into Coinbase and manage these positions. And again, I've got no issues being in the money on these. It's just tough that I can't generate as much money as I can. I appreciate trades don't go the way that they should sometimes. And again, it's all about defending and trade management and bringing that cash flow through the door. So I hope you've enjoyed this video. Make sure you like, subscribe, comment. Again, playlist is down below. I shall see you guys in the next video.